Hello and welcome back to Arcadie's Business Tips. Michael Lapide here on a video talking to you about how you can identify the financial needs of a new business. If you've just started a business recently, you're thinking of starting a business, or not too long ago you started a business, this video can help you. First of all, you need to determine how much money you need to start your business when you're getting going. That's the idea. So you want to project ahead right from the beginning, knowing what you're going to need. And if you haven't done it, you've already started the business, now's the time to project, right? If you underestimate your financial needs, then you're going to run out of cash. So have that gravy, have that extra, build in the buffer. And if you overestimate, then you risk overborrowing and having unnecessary debt. So you don't want to do that as well. That's why line of credits are nice, because then you can use the borrowed debt as you need it and pay interest only when you borrow it. Understand your business model. A product-based business model or a service-based business model require quite different financial needs, right? Your business model will determine the cost structure you will use. Determine also involved in your startup costs. So don't just go, oh, what do I need to operate, but what do I need to start? What kind of capital do I need to start, right? So incorporation fee, business registration fees, fees for permits, equipment, supplies, website development, initial inventory, branding costs, staffing, etc. All those things that you might need right off the bat. Then break down your monthly costs. How much money do you need to cover your monthly? That's called your burn rate. How much money are you going through each month to pay everything? Now, it's going to be your expenses plus debt payments or anything like that. So your total burn rate, right? And we're going to include everything. And then we're going to multiply that monthly cost by 3 to 6 months, so we know that we can get ahead and have enough working capital in there. I usually say 6 months. Some people say 3 months. But having enough working capital out of everything went wrong, you could still carry on. Be conservative when estimating your revenue as well, right? When you're forecasting and trying to say, how much money do I need? And you say, well, I think I'm going to make this much. Be very conservative in the income, because when you first start a business, it's not usually making as much money as you think it's going to. So don't overestimate, and compare monthly and make sure you're on track as to what you projected. So what you projected, are you on track? Because if not, you have to adjust the forecast, adjust the projection, adjust how much money you may need. Determine then your funding gaps, right? You're comparing what you need compared to what you have available, and do you need more funding? Do you have to raise capital or go to a bank, etc.? And have a buffer, right? Always have a buffer in all those projections. Even the expenses, just go a little higher. Just make sure you got a little extra buffer in there, like I said. And remember, review your numbers as you go and consult with a professional. Can you look these numbers over? I don't mind paying you to take a look at these numbers. I want to make sure I'm not missing something, right? And last of all, remember, identifying the financial needs of your business should not be a guessing game. It is about careful review and planning, and this can make all the difference in your failure or success of your new business. We'd love to help you. Give us a call. Post in the comments below. We'd love to hear from you. Thanks for being a part of our business tips, and hope to see you in the next video.